Hey everybody, this is Jim at SP500chart.com. It's almost 7 o'clock on the 17th of January. Been on the phone 2 hours with Microsoft technical support. So anyway, back to the real world. We're going to look at the chart. A little surprise today. Sort of a surprise, sort of not a surprise. But before we take a look, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I could draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. And hey, here lately, I've been a guy who's been drawing lines on charts, erasing lines on charts, drawing lines on charts, erasing lines on charts. Let's take a look. Okay, starting off with a 15-minute chart. Remind you that last night we were looking, or I was, you might have known better, I didn't, looking at what appeared to be a rising wedge pattern after this gap up. But today we I got interrupted there, so I paused. That's why I said today twice. Oh, make that 3 times. S&P got up above this top line, and I didn't think it would because everything looked really settled in, like we were in an ascending wedge, but now we're over this top line. So the bad news is I was wrong about this top line. The good news is you shouldn't have done anything if you were relying upon this, as you were warned not to, as investment advice, because this bottom line never broke. So when you're in this kind of pattern, you don't go, I'm going to sell when we get up to the top here, to the top line. You wait. Or if you're looking to short, you wait. The bottom line is the signal. So we have not seen the signal get tripped. So if you're long, you might look upon this as, hey, bonus. We did better than what I was expecting. However, I want to remind you, as we've seen in the past, that it is not unusual when upper lines are taken out for them to result in a return to the pattern. What I find really interesting is look, and I did not move this blue line one bit, but look where we ended at the end of the day. Right on that blue line, which I will remind you is a line that is drawn underneath the lows of this fall. The lows of June of 2012 and the lows of the beginning, I believe that was October 3rd, 2011. We extend that line up, and that line should not, well, I say should not. In technical analysis terms, this line should have been pretty strong resistance. But today, the market made it over that line by a little bit and ended the day right on that line exactly. Okay, just got... Anyway, my family, it's a long story. We're talking about this line right here and how that has been drawn underneath some significant lows, and it broke down. So this line was for a long time a line of support, and one would expect that to be resistance for quite a while. Yet today the S&P did manage to get over that line and stopped right at it. Now I was talking about the good news is too, even though the bad news is this line got somewhat violated today, the good news is There was no sell signal because this lower line remains intact. So, that's what I did. I'm just standing pat with what I've got. And guys, I'm not going to chase this personally. You do what you have to do. But after this move from roughly 1400 to 1460 in one session, really. I mean, if you think about it, the move was spread over 2 days, but here we were, just a gap up. So really, within a period of eight I say 8 trading hours. You know what I mean? 1 day of trading, we're down here in the low 1400s. We open up the next day 50 points higher from where we opened the previous day. Not where we closed, but where we opened the previous day. And then a wedge-looking formation. It sure looks like the market should be ripe to come back down and test some levels of support. So I'm not going to chase this. I'm just going to let it work it out. And you know something? If I miss some gains because of it, so be it. I have a pretty strong feeling about chasing markets, and I'm not going to chase this. I'll let it come back. I'll let it show me something that it's a more mature pattern to trade on. And you know what I'm looking for? I keep looking for an inverted head and shoulders, and I don't see any other pattern here. If you see something I'm missing, please let me know. We've had these kind of funky looking almost head and shoulders patterns, but that gap up on January 2nd, the trading day, first trading day of the year, just sort of obliterated what should have been, or what I would have liked to have seen as a nice tradable pattern. So going into tomorrow, I'm just looking at this bottom line right here. If we continue to go up or go sideways, great. I'm net long. I'm not 100% long. I'm 30 to 35% long. So I'll just let that money ride. But if this breaks, then I reevaluate. But here's another thing to keep in mind, and this is another reason why I'm having a pretty easy time sticking with a long position here, and that is I think we've got support, but maybe 3.5% underneath where we closed today. Let me see. Actually, about 2.5%, make 2 to 2.5%. I did my math wrong. So we've got support where I think we would be finding it in the 1440 area. So that's only 41 points underneath where we are now. That said, it's pretty easy to let this ride because this looks like a market that just doesn't want to go down. But I think it is a market that needs a healthy pullback. So, is the move that we saw today over this ascending wedge, is this short capitulation? Is this irrational exuberance a little bit by longs? Could this be setting up a move now that ends up taking this bottom line out? I've seen that happen before. So I'm still watching this bottom line. So that's really the gist of it here, guys. For January 17th, 2013, watch this bottom line. If you're long, I would wait for it to break. If you're looking to short, I would certainly wait for this to break. So that's it for today. I want to thank you for taking time out to watch this. Thank you for your subscription. Everybody, take care. Let's see what happens tomorrow.